investors, and welcome back to the Equitymaster channel. I am Mitali Dhoke, research analyst here to simplify mutual fund investing and guide you on a smarter wealth creation journey. So let's begin. What if I told you that you could build an investment corpus of rupees 1 crore? Sounds surprising, right? Even if it feels out of reach today, it's achievable with the right approach. You see, 10 years from now, you won't regret spending on coffee, you won't regret trips or small indulgence. But there's one thing many people do regret, not starting their investment journey early. And here's the uncomfortable truth. Building a rupees 1 crore corpus is rarely about earning more. It's almost always about starting late. So let me ask you this. Is rupees 1 crore really out of reach? Or are we just postponing the decision to begin? Most of you delay investing because you think the income is too low. I'll start once my salary increases, markets are too risky right now, or simply because you don't know how much is enough. Today we are not discussing which mutual fund to buy. We are answering just one simple question. How much do you need to invest every month to reach rupees 1 crore? And you might be surprised how achievable this goal actually is. With discipline, time, and the power of compounding, this goal is far more realistic than most people assume. Even an average salaried investor without a very high income or risky strategies could work towards building this corpus through mutual fund SIPs. It's not about timing the market or finding the perfect fund, but about starting early, staying consistent, and allowing compounding to do the heavy lifting over the years. Now, before we jump into numbers, understand one thing clearly. Your monthly investment depends mainly on time and reasonable returns. And this table will show you why time matters more than most people realize. Let's assume a realistic long-term equity return of 12% per annum, which is commonly used for diversified equity mutual funds over long periods. Now let's see how the monthly SIP amount changes with time. Take a moment to absorb this. The longer you stay invested, the less money you need to put in from your own pocket. That's compounding doing the heavy lifting for you. If you start early and give your investment 20 to 25 years, your actual invested amount is far lower than rupees 1 crore. This is the real power of compounding. Your money starts working harder than you do. If you see the example, investing rupees 12,000 per month for 20 years adds up to less than rupees 30 lakhs from your pocket. But compounding helps you reach the 1 crore mark. Delay this by even 5 to 10 years and suddenly your monthly SIP jumps sharply. Another important point to many investors miss is that returns don't need to be extraordinary. You don't need to chase risky or flashy funds. A well-constructed portfolio of large cap, flexi cap and index funds could comfortably achieve around 11 to 12% over the long term. Right now, rupees 1 crore may feel like a distant goal, something you will think about once your salary increases or when markets feel less volatile to invest. But your future self won't remember market volatility and the exact fund names. Your future self will remember just one thing: when you started. Wealth creation is not about timing the market, it's about time in the market, starting early, staying disciplined, and letting compounding work quietly in the background. If this video helped you see rupees 1 crore as achievable, not intimidating, do hit the like button and share it with someone who's delaying their first step. And if you want clear, realistic guidance on mutual fund investing, subscribe to our channel and turn on notifications. Start where you are, start with what you can. Invest wisely, happy investing.